Y'all, today has been literally the wildest day ever. And I'm still smiling, so I'm okay. I'm okay. But it has been the wildest day ever. This is my third time attempting to do this live video. Okay. And what happened earlier, we were in a great discussion, and for some reason, the power went off for like 5 seconds and then came back on. And honestly, I had had enough at that point. I needed to like rest my bones or something, like rest my mind. And so I decided to take a break and come back at it again. Also, there were a couple things I wanted to do that I felt made the live a little bit better prepared for you guys. So I wanted to bring it back and go over this information again, because honestly, it needs to be said more than one time, because everyone didn't hear it the first time. And if you're working a regular W-2 job, this is something you definitely need to pay attention to, and something that you definitely need to hear. Point blank, period. There's just no exceptions to it. You need to have this information, because this information could be getting you out of whatever financial situation you may be in. Okay. And I'm talking about this right now, not just because it's the beginning of the year, but it's because it's something that needs to be said and needs to be put out throughout the year. It really is. Why? Because people are always getting jobs and switching jobs, and some people just don't really know. And a lot of you guys, a lot of people, should I say, a lot of people, including self, we learned from places like YouTube, TikTok, Facebook, Instagram. We learn a lot of things from that. So I would like to bring a little bit more education to the space. Don't get me wrong, I look at all types of things on YouTube and things like as far as subjects. I dibble and dabble, and I look at the gossip people and see what they're talking about. I look at the celebrities and see what they're doing. I look at the web series and I see what they're doing. I look at education and I see what they're doing. And so I get a little bit of everything, but I do see more things that are not educational, and I'm not knocking those people, because everyone has their place, right? But I do want to get more education out. And two of the main subjects that I feel are very important, even though they are just tools to help you get along in life and to help you not just survive, but to thrive in life. And that's going to be economics and finance. I think those are the top two subjects for me. And so with that being said, I would like to share more financial education with you guys so that you guys can start to live better lives. That's the whole name of the game. And also that we're learning all together. Okay. I learned right along with you. I learned something and then I do it and then I teach you guys what I did. And so that's literally all that we're doing today as well. All right. So what we're going to do is we're going to see, because like I said, a lot of people really don't believe or are just scared to see what else they can really do. If you're working a job, especially for my people who are working full time and overtime, you work overtime to take more money home. And you may be in a situation where you don't necessarily have to, maybe, but we would have to see about that. So what I'm going to attempt to show you is how you can possibly take money that is going out and being held on your behalf by your employer to pay your taxes, and making sure that that employer is holding the right amount. Okay? Because yes, you have a tax debt sometimes. There's an estimated tax debt that they expect. You want to make sure you're paying that. But you don't want, me personally, I don't want to give them too much, because if I'm giving the government an extra couple $1,000s to hold on for me, then I could take that extra $1,000 and put it somewhere else. Now, if you're one of those people that are like, I don't save really well, so I let that it go out in taxes so that when I get my refund, I can just put it all up at one time. I can understand that too. I do understand that. And so what I'm trying to say is everyone's situation is not the same. However, if you are one of those people who are like, you know what, I could use more money in my check. I don't really have a time to get an extra job, or I have kids on top of that. So I don't really have the resources, or maybe you don't have a car. Maybe it's hard to get work. Maybe you work in a more rural area, or live or work in a more rural area where there's not as many options as, say, maybe the city. All these things can be factors in why you may not be able to add more hours. But what you want to do is you want to actually take a look at your check stub and see how much you have coming out in federal taxes. If that amount is very high, and I know that will be for my single, especially for my single head household people without dependents, um, I understand, trust. So this is for everyone. This is for the married people as well. I mean, if you're filing jointly, in fact, I'm going to go over a scenario, and it's going to be a married couple. It's going to be a family of four. But this applies to every household. You want to make sure that you're checking and making sure that you are not giving the government too much, but also not giving them too little, because no one really wants a tax bill when it's time to file. And I hear that from a lot of my high income earners, that I always end up owing. And that's unfortunate, because there are ways around that. So we want to try to tackle some of those issues today. So mainly what I'm trying to say is just don't short yourself. Okay. Don't sell yourself short, because there are opportunities and options out there. And people like me want to bring this information to you guys. So don't sell yourself short, and don't give up, because when it's time for you to get the information, trust me, it'll appear. So what is a W-4? Simply put, a W-4 is your tax withholding. That piece of paper they give you when you first apply for your job, or when you first got hired on. They give you a little packet. And in there, it asks you about your tax withholding. You put on how many dependents and things you got on it. That form. That's the one I'm talking about. It's called a W-4. It's your tax withholding form. Now, this dictates how much money is going to be withheld from your check for taxes. Now, the IRS is not withholding this money. The job, your employer, they're holding this money. And then when they pay their taxes on your behalf, then they send it over. But you want to know how much money is going into taxes. How much money are you telling your employer to hold or put aside for you? That's very important. And you dictate that. They don't dictate that. The IRS doesn't dictate that. You dictate that. So with that being said, if you feel like the government is taking all of your money from your check, they're not. You're giving it to them. It's just maybe that you don't know that you're giving it to them, because that W-4 form that you fill out yourself, that's what tells them how much money to take out. So if you don't like what you see, then you need to update that. If you're owing every year, you also need to update that, because there is something in place, and we're going to go over it. But there is something in place that will keep you from owing taxes every year, and it will also keep you from overpaying in taxes, or having too much money withheld by your employer for your taxes. And so you can check that. You don't have to just kind of aim in the dark on that one. Now, what we need to go through is how to fill out this form correctly, and that's what we're going to go through. So I do have an example for you guys. Like I said, we are going to go with a family of four. Okay. We have Michael and Tamika, and they have two lovely little boys, ages 8 and 10. And we are going to see how to properly fill out their tax forms. Now, they're W-4, not taxes. I don't file taxes, guys. I'm not a tax preparer. So, yeah, I let somebody else file my taxes too. But we want to fill out that W-4 form correctly. And I can tell you, just give you some back information. We're going to say Mike and Mika, just for the sake of of my words, my mouth. I get tongue twisted. So we're going to say Mike and Mika. But Mike and Mika make together about $105,000 a year. Michael makes $50,000, and then Tamika makes $55,000 on her job. Okay. Let's see here. I'm gonna share my screen, so if you would give me just 1 second to pull this up. Here we see it. Okay, there we go. Okay, we have Michael and Tamika. Michael and Tamika are married and filing jointly. Okay. And basically, if you want to see if you're paying too much or too little, if you want to just check, or if you even want to put in your information and see how to adjust that amount, go to Google and type in Irs Tax Estimator. I'll write that in the chat. Irs Tax Estimator. Okay, just type that into Google. You want to make sure you're going to the actual IRS site. I don't know why I was looking at. You want to make sure you're going to the actual IRS website. Okay. And the reason you want to go to that website is because this is the place, irs.gov. We're not reinventing the wheel here. We're using what we already have, and we're learning from the resources we already have. So the irs.gov website has been there. It's not going anywhere. You can go to that website and you know that it's going to be the latest information. It's going to be up to date. It's going to be current, and it's going to be correct, most importantly. Now, they do change it. Like they'll add questions or take away certain parts, or so it does change through like from year to year, because I've even noticed some differences between last year's estimator and this one. They actually kind of separated some questions a little bit. If you've even taken a look at the W-4 form itself recently in the last year or two, it's also changed. So with that being said, let's keep going. So like I was saying, the two of them make $105,000. They have a family of 4. Their children are 8 and 10, 2 little boys. They file married, filing jointly. Okay. So we have gone to the IRS website, and we've looked up the estimator here and clicked into the tax withholding estimator. So on the first section, it's about you section, you just put in their information. Okay. If you're married, if you're single, you hit single. If you're married, filing jointly, that's what the example we're going to give today. So if that's what you're doing, then, that's what you click. And then so forth and so on with the rest of the selections: married, filing separately, head of household, and qualifying widower. The next question: do you or will you or your spouse have a job that regularly withholds federal income taxes from your paychecks? If you're a W-2 worker, that answer is going to be yes. If you have any questions, you see these little question marks? You can always click on it, and it will give you a brief description as well. So if you having a little bit of trouble figuring out what they're trying to say or what they mean, you can click on that. Okay. All right. So the answer is going to be yes, because they are W-2 workers. Okay. Select all that apply. Neither one of them are 65. So I will be 65. My spouse will be 65 before January 1st, 2023. That doesn't apply to them. Neither one of them are blind, so that does not apply as well. And no one can be, neither one of these two guys can be claimed on as a dependent on someone else's return. However, they do plan to claim dependents on their tax return. So you want to check that box. Once you do that, we're going to hit next. And you get to section 2. That is going to be your income and withholding. I'm going to read this. It says, enter information for your job, enter information for each job you will earn income from this year. To use this tool, you need to have a job subject to tax withholding. Okay. That means you need to be a W-2 worker, that your job needs to be withholding or the tax for you. If you have Social Security or pension income and you prefer to have tax withheld from your job to cover that additional income, select 2 or more sources of income and enter information for your first job. After that, you will be able to enter your Social Security and pension income. All fields marked with an asterisk are required. Okay, so it says, how many jobs will you and your spouse have this year in which federal income taxes is regularly withheld? Okay, they're married, they both have a job, one job apiece, so we put the number 2. Now this includes past, present, and future jobs. The first one has been added for you, and then I changed that number to 2 because, like I said, both spouses were working. Now, both spouses do have an hourly income, but if you have any, outside of that, if you have a salary, you can click that. There's no pension or Social Security, so there's no reason for that. So go to the next question, which is select what best describes when you or your spouse earn income from this job. And so they expect to have their job all year long. They're going to click all year. Now you can say I currently hold, or my spouse currently holds this job if you were filling out for the spouse at this time. But right now we're doing it for Mike. But I expect or my spouse expects to leave the job before the end of the year. Or you can select I had, or my spouse had this job earlier this year. I do not, or my spouse does not hold this job, yet I expect, or my spouse expects to start this job later this year. For this scenario, we're going to put that they have held this job for the entire year. Okay. All right. Now, how frequently are you or your spouse paid? They are paid twice monthly. Okay. So we're going to click twice monthly. If that doesn't apply to you, click what applies to you. Weekly, every 2 weeks, or once a month, or twice monthly. They're paid twice monthly. Now, for the sake of this example, I did use the pay period that just previously ended for some people, which was last Friday on the 11th of February. So just for the example, I did use that, okay? All right, it says select the option that best describes you or your spouse's current situation, okay? It says my or my spouse's last paycheck was a good representation of how much I or my spouse earn on an average period. So basically they're saying if your check's pretty much the same every time, you want to click that. If it varies a little bit, you can click the second option, which is my or my spouse's paycheck vary week to week. Averaging 2 to 3 paychecks would provide a more accurate picture of how much I or my spouse make. Okay. Enter your wages per pay period. So in this situation, in this scenario, the wages for Mike, he earns $50,000 a year. So if you do a little bit of math, it averages down to about $1,821 as far as his net. These are just estimates. Okay. All right. Based on the information provided, it looks like your spouse annual income for this job is $86,420. Is that correct? No, it is not. So I clicked, because that was not correct, I clicked no. That's something that is different, guys, from last year's estimator. That question was not in there, so that has been added. So no, that was not correct because we learned that Mike expects to make about $50,000. Again, you can click on that, the total wages. You enter the amount you expect to receive from this year, from this job this year. This includes your gross pre-tax wages, salary, and tips you expect to receive as compensation for your job before contributions for any tax-favored benefits, such as Section 401k plan or health insurance premiums, and before any deductions for taxes. Do not include bonuses, okay? All right, so moving on. Check the numbers you previously entered or enter your or your spouse's own annual income manually. So I had to enter that manually, okay? So enter your federal taxes paid per pay period. You can find this bit of information on your check stub, okay? Look on your check stub, look for your federal taxes section, see how much you paid in federal taxes. You want to put that in this top box, okay? Enter federal taxes paid year to date. You can also get that information from your check stub as well. As for Mike, he has paid so far $524 in year to date in his federal taxes since he's been working this year. Okay, so you put that in number 2. Now, this Mike does not contribute to a 401k, HSA, FSA, or any other cafeteria plan. He doesn't plan on getting a bonus, and he hasn't received a bonus. So we're going to click none of the above for this situation. Okay, now that's everything for Mike. Now we're going to put in Tamika's information. Okay, so it says, describe this source of income. Tamika works an hourly job, and she plans to have that job all year long, just like Mike. She does get paid twice monthly, just like Mike, and her last pay period was Friday, February the 11th. Now, Tamika makes $55,000. That's how much she expects to earn in her income. And so her wages for her paycheck were $1,979 on her last paycheck. Okay. Based on the information provided, looks like the spouse's income comes up to $94,580 this year. Is that correct? That is not correct. I'm not really sure how they got that information. However, that doesn't add up. So with that being said, no. Enter her information that she expects to make, and then look on her check stub. She looked on her check stub. Her federal income taxes paid for this pay period. She paid $156 in federal taxes for this check. For the year, she's paid $624 toward, or put $624 of her income toward federal taxes. That's how much the employer has held on her behalf. Now, she does not have a 401k or an HSA, FSA, or any other kind of cafeteria plan. She doesn't expect to get a bonus, and she hasn't gotten a bonus. So once again, we're going to say none of the above. Now, it says, do you or does your spouse have any other source of income? They do not have any other source of income. They only have their 2 jobs. So because they don't have a scholarship or grant, unemployment insurance, self-employment net income, investment income, or other taxable income, taxes or had taxes withheld or made estimated tax payments for income such as dividends, interest distributions from an IRA, not Roth IRAs, 401k plan, or a trust. Okay, again, if that's a little confusing to you, click that button and you can see other federal taxes paid. It'll give you a little bit more of a description for that. Okay. Now, so no, we put I don't have any other source, and you would just click next. All right, we're on section 3, adjustments to income. Okay. Most taxpayers don't have large enough adjustment to have a significant impact on their tax obligation. Okay. Select any adjustments to income you plan to make when you file your 2022 income taxes, or go to the next step. Okay. In this particular scenario, they do not qualify, or none of this applies to this couple. They do not have any student loan interest deductions. They're not paying any off. They do not have any educator. They do not qualify for the educator expense deduction. They don't have any deductions for contributions to any IRAs, HSAs, moving expenses. No one's in the armed forces, so no one's in the military. They're not paying any alimony out, any old penalty for early withdrawals or savings, and certain business credits for reservists, performing arts, and fee-based government officials. Again, all these have question marks by them. You can see if you're eligible for that, okay? In this particular scenario, they're not eligible for any of these things. They're just 2 working class people with 2 kids trying to make it. So we're going to click next. Okay, now that gets us to section 4, which is deductions from income. Now, this is an important, this is where it gets good, seriously. So check this out. And deductions from income. So deductions reduce the amount of income subject to income tax. Okay. Simply put, if you make $100,000 and you have $25,000 in deductions, that means you won't get taxed for the full $100,000. You're only going to get taxed for $75,000. Get me? Okay. So you qualify for a standard deduction, which It's $25,900. Again, remember they are married filing jointly. It's gonna depend on how you file as far as how much that standard deduction is, because it is different if you're filing, head of household versus which head of household and single, they pretty much get taxed the same, unless that's changed recently. But they pretty much get taxed around the same area. But depending on how you file, your standard deduction may be a different amount. Okay, so if that's the case, and you want to take the standard deduction, what that means is if I add up everything, all of my deductions that I can write off, if it's less than $25,000, $25,900, then you may want to take the standard deduction because it's more. So that means the more you take off, the less you get taxed on. So if your standard deduction is more, you may take that. If you itemize your deductions and you come up with more than $25,900 worth of stuff to write off, and believe me, there's plenty of people doing it. There's some people writing off millions. So you can do that. It's not just for celebrities. It's not just for big businessmen. It's for you too. And this, you know what? I'm not even going to go there. Anyways, select the itemized deductions that may apply to you. So you want to, in this scenario, they don't have any that apply, but we'll go through them for educational purposes. Okay. Medical and dental expenses, those are deductions. Taxes you pay, those are can be deducted. Qualified interest that you pay, so interest on certain things, interest fees, certain interests that are qualified that you can actually, if you paid them, you can actually qualify to get that taken off. Gifts to charity. So if you donate to charity event, charity, however you want to define charity could be a family member. I'm just saying, a donation's a donation. Casualty losses, okay, and other itemized deductions. So that's for people who are doing the itemized situation. But we're taking the standard 25.9, okay? So we're going to click next for this couple. And then these are the tax credits. Okay, so tax credits are amounts you subtract directly from your tax obligation, meaning however much you are expected to owe, if you have credits, you can subtract that directly from that, okay? I'll show you a little bit more. You previously stated you plan to claim dependents because, again, Mike and Mika have 2 little boys. So use the open child and dependent credit section to provide details for any dependent related tax credits. Okay, look at this one. So I told you Michael and Tamika have 2 little boys. They're 8 and 10 years old. So on that section, let me see, we're in section 4, right? No, we're in section 5. Okay, you want to put one child into the child and the age he'll be by December 2022, or the age he was by December 31st, 2022. They had one 8-year-old. They had one 10-year-old here, okay? The child and dependent care credit, okay? Because their kids are 8 and 10, they had to pay a babysitter. They had to pay for child care, okay? With that being said, child and dependent care credit, they had 2 qualifying children because they were minors. They were 17 years or younger, okay? So you put a number 2 there. And then they, again, paid $6,500 in child care services. So they entered that amount, the $6,500, because that is qualifying work-related child care expenses. Again, if you're not sure, hit that button and it'll give you a little summary here. It says the total expenses that you may use to calculate the credit may not be more than $3,000 for one qualifying individual or $6,000 for 2 qualifying individuals. Okay. Expenses paid for the child care of a qualifying individual are eligible expenses if the primary reason for paying the expense is to assure the individual's well-being and protection. So this also applies for special needs individuals, not in this particular section, but I just wanted to throw that out there. If you're having, for instance, if you have a special need individual they could be an adult and they still qualify as a dependent because you're having to provide care for them. So you're their caregiver. then don't forget that. Now, if you received dependent care benefits that you exclude or deduct from your income, you must subtract the amount of these benefits from the dollar amount limit that applies to you. Again, ask your tax professional, consult with them to see what you're supposed to put there if you need more help with that. Now, they spent $6,500. As you can see, $3,000 per child, so they're $500 over, but that's how much they spent, so that's what they put. Okay, so the earned income tax credit, they actually do not qualify for this. However, you may. You can read through here to see if you qualify, but again, I still recommend that you speak with a professional about that. Now, there is a Eitc Assistant. If you see here, I can highlight, you can click that and it will also help you, but it also tells you what a qualifying child is. Now, these, like I said, they don't qualify for this, so we're going to skip that. The earned income tax credit is limited to 3 qualifying children, but they do not have any. So we're going to leave that at 0. They have not adopted, so we're going to leave that at 0. Foreign tax credit, no, they don't apply. Educational, no one's in school. No one has retirement savings at this moment. No one's a homeowner, elderly, or disabled. Again, like I said, caretaker. Business, alternative minimum credit, energy efficient vehicles. That doesn't apply to them in this particular situation. If it applies to you, you're more than welcome to open these boxes up and put in your credit amounts. Okay, so we're going to click next. All right, now we are on the results page. Now, we don't give IRS any feedback at the moment, but now we're on the Irs Estimator page. Okay, this is the results based on the information you entered. If you do not change your withholding, you are likely to get a refund. Now, that's already good news off top for some people, because some people want that refund. I know some people that say, yeah, I want my refund. Now, I don't understand why you would want to get a refund if you're just going to waste it, but to each his own. So from the information that has been provided, their expected tax withholding is $7,175. What that means is, when they filled out their W-4s, this is how much money their job is going to put to the side for them between the two, $7,175. Then the anticipated tax obligation. This is how much they actually are expected to pay based off their earnings and taxes. Okay, this is what they actually are expected to owe, $3,884. Okay, so they're setting aside an additional $3,291. And because they set aside that extra, they'll get a refund for that amount. And that is how you get a refund. So you fill out your W-4 to tell them how much money you want to be taken out of your check. If you're Tamika and Mike, then you have had more money taken out of their checks than actually needed. Okay, their tax bill was only $3,884, but they paid $7,175. So that's why they're getting this refund for $3,291. Okay, so again, this is where the deciding factor is. Michael and Mika can say, hey, we are okay with getting that refund and paying that extra money throughout the year and getting the refund at the end of the year. We're okay with that. They may say that, but then again, they may not. So with that being said, because again, if it were me, I want my money. Give me all of my money. I'm not trying to pay them any more than I owe them. So if it were me, I'd be trying to change that. So if that is you, let me show you how to do that. So if you're in this situation where you're receiving a refund each year, and it's because you're having more taxes withheld than necessary, and you want that to change, all you have to do is scroll on down. You see where it says, if you're happy with your results, then you don't need to do anything. Okay. If you want to keep getting that refund and want to keep overdoing it, out of your check, then don't do anything. Just keep on going out like I hadn't said anything. Just be comfortable with the fact that you should receive a refund based upon what you have right now. But if you are that person that says, no, I want my money, take the money you supposed to have, but give me what I'm supposed to have back in my check, then you need to do this. You see this little scroll bar here? It moves. Okay. Right now their refund is $3,291, but say they don't want to pay anything in taxes. All they have to do is click on this bar and bring it all the way back to zero. I think it may be lagging a little bit, so just give it a second. But bring this number all the way back to zero like that, okay? And we're going to scroll down further. It says for a refund of zero. Hold up, we're still lagging a little bit. There we go. For a refund of approximately $0, okay, you want to break even, right? For that person who wants to break even, Michael, the person on the first job, he was making $50,000 a year. It says to get your desired refund amount, you will need $55 held from each paycheck. If you remember back, Mike was getting $131 was coming out of his check, right? If he wants to break even and pay his tax bill, but not owe and put more money back into his check, he would need only $76 out of each check. So 131, I'm gonna pull out my calculator here. Where is it? 131. Uh-oh. Okay. It's still kind of going slow. So that's 131 coming out already. He only really needs 76 to come out to meet his tax bill, right? So with that, I'm doing the math by paper because my computer's kind of lagging a little bit. So he's paying $55 more each check than he should be. He gets paid twice a month, so 55 twice is going to be 110, which means that Michael is paying an extra $110 a month out of his check. If you really think about it, if Michael's paying an extra $110 out of his checks each month going to taxes that have to pay for, because remember, their tax bill was only $3,800 together, but together they put in $7,100. They had their employer to put aside $7,100 for their taxes, but once everything was put in, they only owed $3,800. So remember, that's the reason they're getting the refund for $3,200. But Michael and Tamika are saying, no, we would rather have the larger checks, give the government what they owe, but all the extra